roadmap that's setting the stage for the next couple of decades. This is the 2026-27 budget, and it's being framed as India's grand blueprint for 2047. And this quote from the Finance Minister's framework, it really nails it. This isn't just about balancing the books for a single year. It's all about a long-term vision, what's being called Viksit Bharat 2047, which, means a developed India by 2047. So every decision, every rupee allocated that we're about to look at, it's all one piece of that much bigger puzzle.
So think about it. Before you can build a massive skyscraper, you've got to be absolutely sure the foundation is solid rock, right? Well, that's exactly where this blueprint starts, with a health check of the entire economy. Let's take a look at the big foundational numbers that everything else is built on top of.
The first number you need to know is 11.5%. This is the projected nominal GDP growth. Now, this is a really big deal because it's the core assumption that underpins, everything. All the revenue estimates, all the spending plans. You could call it a conservative, but definitely confident bet on the economy's momentum.
Next up, we have the fiscal deficit, which is targeted at 4.5% of GDP. The easiest way to think about this is like a household budget. It's the government basically saying we're going to live within our means and try to borrow less. In short, it's a signal of fiscal discipline.
Now this is a headline number. A record-breaking 12.2 lakh crore rupees in what's called capital expenditure, or Capex. And just to be clear, this isn't money for paying salaries or day-to-day bills. No, this is a massive investment in building the country's future. We're talking roads, ports, railways, the whole 9 yards.
And this chart just drives that point home. Just look at that jump from the previous year. It's not a small step up, it's a giant leap. The government is essentially doubling down, using public money to build the backbone of the economy, which they hope will then pull in even more private investment.
Okay, so we've seen the big 30,000-foot view. Now let's zoom right in and see how this blueprint might actually affect your wallet and the markets. We're going to talk about taxes and some pretty key reforms.
For a lot of us, the first question is always the same. So, are my taxes going up? Well, the short answer for this year is no. There are no changes to the basic income tax slabs, but that definitely doesn't mean nothing's happening. There are some really important shifts underway, especially if you're active in the stock market.
So before we get into the change, let's just do a quick level set on what we're talking about. The Securities Transactions Tax, or STT, is just a small tax you pay whenever you buy or sell securities on a stock exchange. It's pretty straightforward, but even a small tweak can have a pretty big ripple effect.
And here it is. The STT on futures contracts has been nudged up. Now, what's really interesting here isn't just the number, it's the why. This isn't really about collecting more tax revenue. It's a very deliberate move to try and cool down excessive short-term speculation and instead encourage more stable, long-term investment.
And there are a few other targeted tweaks as well. Share buybacks are now going to be taxed differently, which brings them more in line with how dividends are treated. But on the other side of the coin, there's some relief too. We're seeing major duty exemptions on 17 critical medicines for things like cancer, and a duty reduction on parts for lithium-ion batteries, which is a nice little boost for green energy.
Okay, this brings us to what I think is the real heart of the long-term vision. Beyond just managing the present, this budget is all about building the future. The government is placing 4 major strategic bets on industries that it believes will secure India's growth and self-reliance for decades.
So try not to think of these as simple spending plans. Think of them as calculated investments. A game plan to create domestic champions in really high-tech, high-growth areas. The goal here is to shift from being a major importer to becoming a global leader in these critical fields.
The first bet, and you could argue it's the most critical one, is on semiconductors. With a massive outlay of 40,000 crore rupees, the next phase of the India semiconductor mission is aiming to build the entire ecosystem, from designing our own chips to manufacturing the equipment. These things are the brains in everything, from our phones to our cars. Bet number 2 is in Biopharma. The Biopharma Shakti scheme is a 10,000 crore rupee push to make India a global hub for developing and making advanced medicines, like biologics. The plan is ambitious, even including a massive network of trial sites to really speed up R&D.
And the final 2 bets? They're all about securing the raw materials for the future. This means creating dedicated rare earth corridors in 4 different states, controlling that supply chain from the mine all the way to manufacturing. And right alongside that, 3 new plug-and-play chemical parks are being set up to really strengthen our domestic chemical industry.
So you're building all these incredible new industries. That's great. But how do you connect them? How do you move the goods, the people, the ideas efficiently? Well, that's where the next piece of this blueprint comes in. A huge, nationwide infrastructure push.
And the plan tackles this from multiple angles. First, speed on land with 7 new high-speed rail corridors announced to link major economic hubs. Second, efficiency on water with plans for 20 new national waterways. And third, self-reliance at sea with a 10,000 crore rupee investment so we can build our own shipping containers.
Now, the really crucial thing to get here is that none of these projects are happening in a vacuum. The high-speed rail, the waterways, the container manufacturing, it's all part of one single strategy to create this seamless web that connects industrial zones, ports, and cities to hopefully supercharge the whole economy.
All right, let's zoom back out one last time. We've looked at the economic foundation, the changes for our wallets, the big bets on future industries, and the infrastructure that's going to connect it all. Now, let's see how all those pieces snap together to form the complete blueprint for 2047.
This really sums up the whole strategy quite neatly. It starts with a strong economic foundation, fiscal health. Then, it invests heavily in future-proof industries like semiconductors. Next, it builds the physical connections with massive infrastructure projects. And finally, it provides some targeted relief and reforms. You can see it's a pretty cohesive plan.
So the vision laid out here is, without a doubt, ambitious. It's a clear, comprehensive plan. But as we all know, the road from a blueprint on paper to a reality on the ground, well, it's always a long one, and it's usually filled with challenges. So that brings us to the final thought I want to leave you with. What do you think will be the single biggest hurdle in actually executing this 25-year vision for India?